Hey there, everybody. Just want to confirm that you guys can all hear my voice and see the screen right now. You should be able to see my presentation, the title slide. Give a little shout out in the chat box here. Okay, cool. So we'll wait just like about 2 minutes or so before I jump in and get started. That way everyone can see the presentation. From the beginning. It will be available on the archives later, though. But what we're going to be talking about here is a strategy that really can be applied not just to swing trading. It can be applied to day trading as well. But we're going to talk about the indicator that I use to flag setups, and then how I can kind of tweak my analysis to focus more or less on swing trades versus day trades. Yep. Yes, indeed. Yes, indeed. And I have something kind of cool to show you guys, something we built. It's not really, it's available for our Thinkorswim charting package, but I use this charting method to flag binary option setups because it works very, very well. And with this little custom tool we built is something that you can really quite easily use to do this analysis very quickly. I mean, it's made it a million times easier for me to do this on a day-to-day basis than it was before. So it's pretty exciting. And all right, so I will be back here in just about another 60 seconds, and I will jump in and get started from there. All right, guys, we'll give me 1 more minute here. Alrighty, team, let's go ahead and jump on in here. So we will be going through this presentation in a couple different sections, basically. First, we're going to start by taking a look at the Ichimoku cloud, how it works, very quick overview. Then we're going to jump right on into some examples of trade setups from today's trading session, and kind of ways that I can tweak my analysis to fit it around a plan that's more focused on day trading or more focused on swing trading. Okay, so let's go ahead and jump on in here. Before we do get started, I have to read our standard boilerplate risk disclaimers. Trading on Nadex involves serious financial risk and may not be appropriate for all investors. This information presented here is for informational and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include Forex, stock, indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their entire investment on any given transaction. However, the limited risk nature of Nadex contracts ensures that investors cannot lose more than the cost to enter the transaction. Nadex is subject to U.S. regulatory oversight by the CFTC. Day trading, short-term trading, swaps and futures trading are risky undertakings, not appropriate for all investors or someone with little capital, little or no trading experience, and or low tolerance for risk. Never execute a trade unless you can afford to lose your entire investment. All trading operations involve serious risks. No trades or recommendations or advice cannot be sued for losses of capital. Please contact or consult your broker or registered investment advisor for questions about trades, margin requirements, and capital requirements, or execution-related issues. Okay. So my name is James Romelli. I'm a trader and educator here at Alpha Shark Trading, where I actively trade equities, options and currency pairs. And if you don't know who I am, maybe you do. You may have seen me on TV. I've been on CNBC, Bloomberg, Fox Business, BNN Canada, a couple of local affiliates here in Chicago, a whole bunch of times. And I do quite a bit of writing as well. So you may have read something I've written online: Futures Magazine, Active Trader Magazine, Resource Investor, CME Open Markets, and a handful of other online publications as well. Okay. So we're here to talk about the Ichimoku cloud. So if you're kind of curious what the basis for this strategy that we're going to go over with here is, it's going to be the Ichimoku cloud. This is what we're going to use to find our signals. This is what we're going to use to confirm those signals and grab levels and kind of manage trades after we actually find and flag these signals, okay? So what is the Ichimoku cloud exactly? Well, the Ichimoku cloud is a technical analysis method that uses past, present, and future levels to help traders identify if a security is in bullish or bearish territory. Definitely something that's useful when we're talking about binary options, where our strike price selection and overall trend is really important because of the settlement nature of the options. So the Ichimoku cloud, its full Japanese name, actually translates to one glance equilibrium chart. Okay, this means that a trader can look at a security on a certain time frame, and the indicator, the Ichimoku cloud, is designed to tell them at one glance, meaning I need to take no more time other than the time it takes to look at the setup, to determine whether or not we're in bullish or bearish territory. Now, the strategy that we're going to go over is a little bit more complicated than that, but what we're doing is using the cloud to identify on various time frames the strength and directional bias of trend. And then when we find setups where it agrees across specific time frames with our bias, that is the trade entry. Okay, so there are 6 components of the cloud, and we're going to go over them each here. Once you kind of have an understanding of them, it really isn't that important to remember, at least in my opinion, the actual calculations and how these things are plotted on the chart. Just kind of having an idea of what these lines and what these levels tell us is important to using the cloud going forward for this specific application that we're going to be talking about. So the 6 components of the cloud, and like I said, I don't really think you necessarily need to remember all of these names, are the Tenkan-san line, the Kijun-san line, the Senku-span A and B line, the Kumo, the Chinku-span line. And when we add all of these together and apply them on the chart at the same time, this is what we get. This is what the Ichimoku cloud looks like. Now, how many of you in here have never seen this before, ever? How many of you here have never seen this before? Or maybe you've seen it. I mean, I'm sure most of you have probably seen it. But here's a better question. How many of you have seen this before but really have no idea what it is? If I were to ask you to explain it to me, you wouldn't be able to. There's probably a lot more people in that camp, right? If you are someone who reads things online about trading currencies or about trading at all or technical analysis, this is a pretty popular indicator. It's becoming more and more popular as well. So it's probably something you've come across in the past. I think a lot of people are aware of it, and maybe you sort of know the very basic components of it, but don't necessarily know how to apply it to their trading plan. Now, we have a chart here that is a single equity, and I'm just picking this because it is a nice looking chart and it's easy for me to broadcast this to you guys and see all the levels nice and blown out. We're going to look at Forex pairs a little bit later. Okay, so this is what it looks like. The individual components are all calculated differently, but essentially what it is a set of moving averages. The first component, the green line here, is the Tenkan-san line. It's my shortest, fastest moving average that I have on the Ichimoku cloud. It's the highest high and lowest low divided by 2 over the past 9 periods plotted under the current bar. So it's essentially a 9-period moving average, yeah? It moves quickly. If I'm looking at the daily bar like this, it's using 9 days worth of price action. If I'm looking at the 5-minute bar, it's using 9 5-minute bars worth of price action, so on and so forth. When we're looking at the Ichimoku cloud in a setup like this, where we're above the cloud and the cloud is sloping higher, and we're in a clear bull market, this is my first level of support. So if I wanted to find a place where I could potentially add to a position or even trail a stop if I want to be conservative. This is a good level for me to use to do that. Okay, that's kind of the main function of it. It tells me short-term trend of whatever this security is on this time frame that we're looking at. Now, by itself, that doesn't really give me a whole lot of info, so I need something to compare it to. And that's where the second component of the cloud comes in, the Kijun-san line. It's a little bit slower than the Tenkan-san line. It's the same calculation, but it uses 26 periods of data rather than just 9. So when I'm looking at this is my slower moving average. Now I have something to compare it to, right? I can compare it to the 9-period moving average. This is our second level of support on this chart, right? So this is support level 2, this is support level 1. And not only does it flag support and potential opportunities for me to add to a position or trail a stop or to use as a stop loss, what would it tell me if I see this 9-period moving average move below the 26-period moving average? What would that tell me about the current trend in this particular chart? Yeah, that it might kind of, might be running out of steam. Trend might be getting ready to reverse, right? The bull market is weakening. It's not as strong as it was when we were stacked on top of each other like this, right? So this is kind of how the cloud works. As we add in more of the components, I can essentially like make a checklist, right? And say, okay, bull, bear, and then put check marks in each column because I have so many different things to compare them to. So let's kind of continue to move forward here, and we'll add on to the analysis that we're getting with each component. So we're above our 9-period moving average, which is above the 26-period moving average, and both are above the cloud. So right now, all of those 3 components are telling us that this is a bullish looking setup. These 2 components are confirming the bull market and strength of trend on this chart. Now, the next 2 components are important because they form the bounds of the shaded area that you see here, okay? Now, if you take nothing else away from this presentation, and really this is kind of the main thing that you need to wrap your head around to understand the actual trading strategy we're going to go over in a little bit here. If the market is above this shaded area, it's in bullish territory on that time frame. If it's below the shaded area, it's in bearish territory on that time frame. Now, the Senkou-span A line is different than the first 2 components because it's calculated the same. It's still just a moving average. It's a moving average of the Tenkan-san and Kijun-san, though, but it's plotted 26 bars into the future. Okay, so this is where the forward-looking component of the cloud comes. This point right here at the very end of this chart is calculated using today's data. If we were to draw a line straight down to the top of the cloud from today's price, that would have been plotted 26 days in the past, okay? And again, by itself, it doesn't really tell us a whole lot of information, but when we have an even longer period moving average to compare it to, what does it tell us? It tells us how strong trend is over a longer period of time. So we have 2 moving averages plotted in real time that are or under our, in our current time frame, that are 9 and 26 period moving averages. And then we have 26, and then we have an average of those 9 and 26 period moving averages plotted along with an average over 52 periods, okay? So again, we have a fast and slow moving average. So when we have the Senkou-span A above the Senkou-span B, which is a 52 period average, what does that tell us about trend? Bullish or bearish? In general. Right, bullish, exactly. Exactly, trend is bullish. And again, just like the 9 and 26 period moving averages that we have back here, what would happen if the slope of this cloud starts to move lower, meaning the Senkou-span B is now on top and the Senkou-span A is below it? Well, the trend is weakening, right? So this being plotted into the future, and I think a lot of traders kind of don't really wrap their head around this. It doesn't really tell me anything about where the price is going to go. It doesn't say, hey, this is the level in the future at this time that the stock is going to go to, or the currency pair or the future or the index is going to go to. It doesn't tell me that. What it does tell me is how strong trend is and what the projection looks like in the future for the strength of trend. If it reverses and it's downward sloping, that's bearish. If it's upward sloping, that's bullish. Pretty simple, right? Does anyone have any questions so far? Does anyone have any questions so far? Questions, comments, concerns? Okay, cool. So the shaded area, this is another component, the fifth component of the cloud, is simply the area between the Senkou span A and Senkou span B. Most charting packages, they make a make it like red. Yeah, we're gonna get into that in a second. Most charting packages, if the cloud is downward sloping, meaning the Senkou span B is on top, they'll make it red like this, and then they'll make it some other color, green or whatever, for when it's upward sloping. Now, the Kumo itself really doesn't tell me a whole lot other than the kind of conviction in trend. If the cloud is very thin, then it really doesn't show me a whole lot of conviction. And you can kind of see that in this chart, right? I mean, we know that this chunk of the cloud right here, this red part that's flat and sideways, that was plotted 26 periods in the past. But, take a look at how price action traded through there. In general, it wasn't really trending. It started to towards the end of that, and that's when this cloud picked up and started sloping higher. But for, 2 weeks, we were choppy and sideways. So when the cloud is flat and thin, that indicates that, hey, we might kind of be waiting for something to happen here. There's not really a breakout necessarily on its way, right? We know that, once we started to pick up momentum here to the upside, that's when the cloud started to pick up its momentum as well, okay? So the teal line or the aqua colored line is called the Chinku span line, and it really, a lot of cloud practitioners don't even pay attention to it. I'm one of them. It's just the closing bar's price of the current bar plotted 26 candles into the past, okay? So it's just this price 26 bars in the past. Some traders, they use it as like a final confirmation check against the setup that they're seeing on the cloud for the rest of the components. If I'm seeing and this is kind of the basis of the strategy we're going to talk about. If I see a breakout of the cloud to the upside and this line isn't quite yet above the cloud in the past, then I might not, lean into the setup quite as hard. To be honest, I don't really pay a whole lot of attention to it, okay? So that covers the 6 components of the cloud. We're going to go over 1 or 2 more things that you need to understand about the cloud before we jump into some live trade examples or some trade examples here. But does anyone have any questions so far about anything that we went over? Any questions so far, guys? Questions. All right, cool. So, and this is what's important, and particularly important when we're trading binary options. You guys tell me, what are your favorite kind of time frames to use for binary options? When you're looking at binary trade setups, are you looking at intraday setups that are, over the course of an hour or two? Are you looking at setups that take place over the next 4 hours, 8 hours, 10 hours? Are you looking at weeklies? It's really important to have an understanding of the time frame that I need to be using, because 1, it's going to make my technical analysis better, and 2, it's important for binary options, right? Because there's a time decay component of it, and because there is a expiration that really clearly defines when my trade is over with, I need to have my analysis taking place on the important and relevant time frames to my trade, right? If I'm someone who, Chris says, I look at trades that take place over the course of 30 minutes, right? If I'm looking at a trade setup that's going to wrap up in 30 minutes, am I going to be doing my analysis on the daily bar? Or how about even better, does the daily bar even really matter? Does it enter into my thought process at all if what I'm thinking about is where markets are going to be in a half an hour? Well, probably not, right? Probably not. So this is where we enter into the idea of working with the proper time frame. And for different securities, it changes, right? Because they trend over different time frames. Equities and indices, those tend to work well on the daily bar. But we're going to go over something that I can use to confirm setups on a shorter time frame that I would be able to apply to indices on, say the 5-minute bar or something even faster than that for very quick trades. Currencies and currency futures, those generally trend the best over 4 hours, 4-hour bars. Now that's still something I can use binary options for because there's, expiries listed all night and all day long. But what we're going to focus on here is a strategy that I use where I'm taking my signals off the 15-minute bar and confirming them with higher time frames. Oil and other energy names trade very, very quickly as well. So, I might not necessarily be concerned about trading them with a very short time frame chart, okay? So I want to go over some examples and kind of explain the strategy a little bit more here. But before we do that, are we all solid on everything so far here? I know that we went through the cloud quickly, and you might have some questions about the individual components, but at the same time, for what we're going to be talking about here, I don't think you really need to have like a super expert level understanding of the component calculations or anything like that. So are we all solid on what we just went over there? Because we'll look at some examples here. Okay, cool. So first, I'm going to explain my signaling process in the context of day trades, and then we'll talk about how to tweak that to a swing trade time frame, okay? So basically, and I'll show you guys this, this is how I was always trying to find my setups. For swing trades, these are the time frames that I'm concerned about. The 4-hour bar, the daily bar, and the weekly bar, okay? Now, I would have to go through every day and figure out where we were on all of these time frames in this sheet, right? I'm looking for setups that are going to confirm across all of them on breakouts. Now, this is very tedious to have to update this all of the time. Technically speaking, I should be looking at this sheet and updating the positionings every 4 hours, because every 4 hours a new 4-hour bar closes, and it might change the positioning relative to the cloud every 4 hours, right? That's really tedious, and I don't think anybody really wants to take the time to do that. So what we did was we built something that does it automatically, okay? Now, let's talk about the setups in the context of day trades first, okay? Because it seems to me like most of you are, based on your responses to the last ones, most of you are actually using these more as a day trade type of vehicle, and that's fine. The concept of this strategy is something you can apply to literally everything on any time frame, okay? So let's go over a setup here from this morning. There were 2 really good trades that came across today in these currency pairs that I track. So USD Canadian dollar, right? I was hoping that at this time of day we'd have one that was like actually developing and getting ready to fire, but the ones that we have are ones that are a little bit older. So here we have USD Canadian dollar, okay? So let's just think for a second that this morning we were looking at this chart on the 15-minute bar, okay? Here we can see that the market broke the cloud to the downside here. It also did right here. We were trading sideways inside of the cloud. It did again right here. And what we're looking for is a break of the shaded area to the downside or upside with confirmation on higher time frames. Now, what this indicator is doing for me is showing me what the positioning on the time frames above my current chart time frame look like, okay? What I want when trading these setups is for a break to happen as the higher time frames are also positioned with the same directional bias, okay? So what we have here is the 30-minute, hour, and 4-hour bar, okay? If these dots are red, it's telling me that those time frames are below the Ichimoku cloud. Okay, this is the current time frame, and this red dot appears if all 4 time frames line up with the same direction. Okay, does this make sense to everybody so far? So when this break of the 15-minute bar happened to the downside, what is the bottom indicator called? I mean, it's custom. It's something I built. It's something we put together ourselves. So this isn't just available in your Thinkorswim. We're going to be releasing it pretty soon, probably like within the next week and a half or so. But this is something that is just saving me time from having to do it visually, right? Like if I wanted to go and confirm it myself without having to without having this indicator, it's pretty simple. Okay, we're breaking on the 15-minute bar. You know, what do we look like on the 1 hour bar? Oh, well, we were below the cloud at that time. How about the 4 hour bar? Oh, well, we were below the cloud at that time as well. It's 7 o'clock this morning. Okay. So what this is doing is telling me when the higher time frames agree with the directional break of the time frame that I'm taking my signals off of. So this would have fired my short right here. The close of the bar would have been 133, 1.33177. Okay, that's the short entry. Now, if I were to trade the spot currency pair, my entry would be to sell the close of this bar with a stop above the cloud. Right? Now, with binary options, I don't really have to worry about that stop loss component of the trade setup because my risk is limited and managed by the settlement nature of the binary options contract. So in USD Canadian, I would go and find a binary option that lined up with that time frame and with that strike. Okay, so my first play would be to get short an at the money binary option right here. What am I going to be able to do that for? How much am I going to be able to sell an at the money binary option for at this point this morning? What would I have been able to sell it for? The answer to that question is the same regardless of the setup or what time of the day it is for the most part. What in general is a binary option that is at the money, right at the strike price that the market is currently trading at, going to trade for? Yeah, around $50, right? Anywhere around $50. So my first setup would be to sell that option, okay? I would look to get short an option with a strike price that lined up with the close of the bar where the entry signal happened. And I'm doing this because why? Because all of the time frames that I care about above that are lining up well, right? So I don't need much of a move after I get into that position for me to make a profit on that at the money option. And in general, if I'm selling it for around $50, my risk to reward ratio is around 1 to 1, right? But all I need is a small move lower over a certain period of time. Right, so if let's say I sell it for 50 and it's right at the money, one tick lower is all I need to make my profit in that position. How can I set up a position where I have a 1-to-1 reward to risk ratio on $50 with a movement requirement of only 1 tick by expiration? Can I set that up in the underlying spot market? Is it even possible? No, it's not, right? Not possible to do. Sure, it's possible. Okay, it is possible to do, right? I could put the position on with a 1-tick stop loss and watch myself get taken out in a second, right? But this is how I can confirm these setups. Now, I could go as well and find other trades like that use the same signal. If I wanted to sell an out of the money binary option above the cloud, I can line that strike up as well. My risk to reward isn't going to be as good, but I also don't need the market to slam lower. If I want to find something that's a little bit more in the money that I can sell for a higher price and get a good reward to risk ratio, I can do that as well. So every time this signal hits, there's 3 ways for me to approach it, okay? At the money with about a 1-to-1 reward to risk ratio, an in the money option, and it's not uncommon to get like a 3-to-1 reward to risk ratio there, or a out of the money option. And in that case, I'll probably be looking at something that's, a reward to risk ratio that's probably, the complete opposite of the one down here, right? But all of these trades have their drawbacks and have their benefits. This one pays off really well, but needs a bigger move. This one needs a very small move, but relative to risk, pays off at basically even money. This one up here doesn't need the market to move. Market could even rally from this point as long as it doesn't breach that level to the upside, and I still make a nice ROI, return on risk, right? If I'm risking 75 to make 25, my return on risk is still north of 30% for a trade that wraps up, within a couple of hours, half an hour, however it is I just decide to set it up, right? So does the signal flagging component of this make sense to everybody? I want to go over another example of a trade that hit of a setup from this morning. Euro pound had the exact same type of signal, except this was much later in the evening. We broke the cloud earlier in the morning around 4 o'clock, 4:15. We broke the cloud to the downside, and we can see here that the 30, 60-minute, and 4-hour bar were also below the cloud. So that's a confirmed setup, right? That's a confirmed setup. And take a look how much this one ran. I mean, huge move to the downside, right? And again, the same approaches could have been taken here. At the money, above the cloud, out of the money, further in the money. And as far as picking strike prices, there's a lot of different things that I can use to do that, depending on the time of the day and the expiration that I'm going to use. Let's say that I want to take a play that wraps up and expires in an hour and a half. Well, I can use something like the average true range of the 15-minute bar to figure out how much movement might be in the market as a potential over the next hour and a half, right? There's a lot of different ways that I can select strikes. Now, to tweak this to a swing trading type of setup, all I need to do is change my entry time frame and my confirmation time frames above that entry time frame. So what do you guys think is a good time frame to use for entry if I'm looking at a swing trade setup for currency pairs? How fast do I, what time frame do I want to use there? What do you think is appropriate? What would make sense for swing trade setups? Yeah, the 4-hour bar for a swing trade, that probably makes the most amount of sense. Now with Nadex options, we can look and see that weeklies are listed. So the only time that the maximum length of a trade is going to be 1 week, right? Monday to Friday. Today, if I used weeklies, it would just be 1 day. But let's go ahead and see what it would look like. We switch to the 4-hour bar, my confirmation time frames. And again, remember, you can just do this visually. I just happen to have a nice nifty little tool that does it for me. So on the 4-hour bar, I might want to use the daily bar as a confirmation time frame, the 3-day bar, and the weekly bar. So now, look, I have a 4-hour bar that is going to be giving me signals and confirming on higher time frames. Now, what do you see about this pair on higher time frames? We had a nice rally above and then break below the cloud right here. But why is this not as strong of a setup? And it really wasn't. I mean, this is a 4-hour bar. The market traded basically nowhere for another 12 hours after this hit the tape, or after this signal came across. Why wasn't this like a confirmed setup? Well, if we take a look, we can see that the 4-hour bar was breaking to the downside. However, the daily is still above the cloud. The 3-day is inside of the cloud, and the weekly is above the cloud. So why would I want to get short on a 4-hour time frame when overall trend on my higher time frames is indicating that that trend is more bullish, right? So I can tweak the confirmation time frames and my entry time frame to anything I want to mold around the idea of trading binary options with various expiries. Really simple to do and really easy to confirm. Now, I know a lot of people are probably looking at this and saying, well, heck, I'm never going to get any signals if I'm waiting for this very specific situation on the 4-hour bar. And you know what? Yeah, it's going to be more selective for sure. Absolutely. You're not going to see as many trades as you would on the 15. But think about this. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, I think 10 currency pairs that are listed on on the Nadex platform, even if I only get one swing trade signal per month per pair, that's still going to, be a viable. It's still going to be a strategy that's going to keep me active, right? So I want to take a couple more questions from you guys, but before I do, I want to give you a chance to check out this book that we have to offer you guys today. It's all about the Ichimoku Cloud. It's a really fantastic resource. You can go here and download it for free. If you're interested in the Ichimoku Cloud or anything we talked about here, it's a super good guide for understanding and applying knowledge of the cloud to anything going forward. You can take this, kind of read it over, and make it a resource for you going forward when you're looking at these types of setups, right? So very interesting strategy. I mean, we use this not only for currency pairs, but for equities as well, indices as well. It really can be applied to almost any market out there, because what is the Ichimoku Cloud? It's just using a price action and price momentum indicator to flag these signals, all right? So I want to wrap up here in the next couple of minutes, but before I do, I want to take some questions from you guys. Does anyone have any questions about anything that we just went over here today? Any questions at all, guys? Questions, comments, concerns? Questions, comments, concerns? Yeah, check out the book. Definitely check out the book. And we actually are going to have I'm going to have another presentation on a topic sort of similar to this on Monday. We're going to talk about more applications for the cloud and this triple confirmation type of analysis. So how do you recognize a range market with the cloud? Yeah, so what we're looking at is breakout setups, right? So range bound market isn't really going to give me the opportunity to find those setups, right? But what we are looking at with the cloud is a non-trade or no trade setup if my confirmation timeframes are inside of the cloud. So kind of like that example we just looked at there in euro pound on the 4-hour bar, one of my higher time, my lowest time frame was below the cloud. My higher time frames were above, inside, and above the cloud. So that is a market that I think could indicate some chop, because there's so much disagreement on all of the time frames I'm using. Does that make sense, Ron? Probably like within the next week or so, Michael. Typically, I honestly don't know. I mean, that's not really up to me. Exactly. The signal is basically waiting for all the ducks to be lined up and then jumping into the position. Correct. Well, alrighty, guys. I'm going to go ahead and put the link in here. Yeah, and be sure to register not only for the next Monday session, but the Monday after that. We're going to be doing another one that's all on this topic of trading with the cloud with triple confirmation using binary options. I kind of figured that this session we kind of go over the actual technical application, and then I'll have a bunch more examples. Oh yeah, of course. I would just adjust my time frames, right? So if I'm looking at a 20-minute binary, what's my signal time frame going to be? Probably like the 5-minute bar, the 3-minute bar, and then my confirmation time frames will be something faster, but faster than what we're using for our swing trades, but slower than the actual signal time frame. So maybe I am signaling an entering off of like the 3-minute bar or the 2-minute bar and confirming on the 5, 15, 30 or something like that. Right. I don't trade 20-minute binaries all that often, because I think the signals on the 15-minute bar are about as fast as I want to go for currencies. But alrighty, guys, I'm going to put the link in here again for you guys. alphashark.com/Nadex to get this free book. If you guys want to register for next Monday's session, you can do so here at this link as well. And I will also put my email address in here in case anyone has any questions about any of this going forward, okay? Feel free to shoot me an email. Well, thank you guys all very much for being here. and for your questions. We'll be back on Monday and the Monday after that to go over this even more. So, be sure you register and come to those sessions. Everyone have a good one. And as always, happy trading. Thanks, guys.